Kia ora and welcome everyone. In this training video, we will explore the tax responsibilities of operating as a sole trader in the Cook Islands. This video aims to achieve the following outcomes: define what a sole trader or proprietor is, explain the different types of taxes surrounding a sole trader business, understand the sole trader's tax obligations, and apply these taxes to a sole trader business if applicable, and be able to comply. To understand a sole trader's tax obligations, it's important to first know the business structure your enterprise operates under. The common business structures include sole trader or sole proprietor, partnership, and company. However, in this training video, we will focus specifically on the sole trader structure, how it operates, and its tax obligations. So, what is a sole trader? A sole trader is an individual who starts and operates a business independently. This means the individual will reap the profits or benefits from the business, but will also bear full responsibility for any debts incurred, including tax obligations. As a sole trader, you will use your personal RMD number for the business, although you may operate under a trade name. This can be confirmed with the Inland Revenue Office. Additionally, as a sole trader, you can hire staff and register for value-added tax, or known as VAT, when required. Finally, there is no requirement for a sole trader business to register with the Ministry of Justice. The first type of tax is income tax. What is an income tax? An income tax is a levy imposed on individuals and businesses on income earned. What are your income tax obligations? As a sole trader, you are required to declare the net profit or loss from your business, which is the difference between your income received and expenses paid, as well as any other income you may have earned during the calendar year. When filing, you must include supporting documents or financial reports, such as a profit or loss statement that's required, balance sheet, and a fixed asset register, if they're applicable. Lastly, make sure to file your income tax by the 1st of May of the following year. For example, the 2024 income tax is due by 1st of May 2025. As a sole trader, you are taxed based on personal income tax rates of 17%, 27%, and 37%, depending on your earnings. You can find the tax brackets table at the Inland Revenue Office or on their website. You are also entitled to a tax-free threshold of $14,600, provided you have been in the country for a full year. However, if you are in the Paenua, you should contact the Inland Revenue team for further clarification, as the tax-free threshold for the Paenua is $60,000. That was effective from 1st July 2023. Since a profit or loss statement is required when filing income tax, it can be as simple as an Excel spreadsheet. It should detail your business income and expenses for the entire year. This will also help you assess the financial health of your business, indicating whether you are operating at a loss or generating profit. The second tax type is value-added tax, or known as VAT. So what is VAT? VAT is a tax on goods and services supplied in the Cook Islands. This is also applied to most imported goods. The VAT is charged at a rate of 15%. When should you register for VAT? As a sole trader, you must register for VAT if your annual income exceeds the $40,000 threshold, or if you expect to exceed it. This means earning or expecting to earn $3,333 per month. Alternatively, registration is optional if your business annual income is between $20,000 and $40,000. How does VAT work? As a sole trader, you must be registered for VAT in order to charge and claim VAT. A VAT-registered business charges VAT on its sales and income and can claim back the VAT paid on its purchases and expenses. It's important to know that you can only claim VAT on expenses made with VAT registered businesses and on business related expenses. To claim the VAT you've paid, you must complete a VAT return, which should be filed by the 20th of each month. Finally, be sure to keep all source documents related to both sales and purchases for your business. The third type of tax is pay as you earn, or PAYE. This is a tax deducted on income, wages, or salary earned from employment. As a sole trader, once you begin employing people, you are considered an employer. As an employer, you must register for PAYE with Inland Revenue. Each employee is required to pay PAYE tax, and it is your responsibility to deduct the appropriate PAYE amount from their wages, if applicable, according to the PAYE schedule or the table. Additionally, you are required to file and pay the PAYE by the 20th of each month. If you are a sole trader, make sure to familiarize yourself with your tax obligations. For any clarification, you can contact the Inland Revenue team via the phone or email provided below, or even visit their website.